What's good, trappers? It's your boy, the Wall Street Trapper. And y'all know my goal is to help the culture build wealth one share at a time. Y'all know what it is, man. Well, watching Wednesdays, man. You already know. And today we just focus on watching the whales, seeing what moves they make, seeing what things they selling off, seeing where they taking profits at, seeing where they adding to positions at. And so the goal for me with this situation is it's quite simple, right? The objective here is for us to understand what's causing the markets to move up and down, and that's these whales. So in case some of you all don't know what a whale is maybe your institutional investors, right? You don't know what institutional investors is. That's your insurance companies, your 401ks, your retirement plans, your pension funds, some of your wealthy investors like Bill Ackman, just the big boys. Anybody buying 500,000 shares or more of a business is a whale. You feel me? So we gonna each and every week. This is the third week that we got into whale watching Wednesdays. We've been getting some good feedback on it, some good comments on this. Do me a favor, man. Like this, share it, comment below. I would definitely appreciate that. If you haven't checked out the Re-Up Tuesday that me and the Queen did yesterday, definitely go check that out. We broke down something about margins, and that was real cool, right? So that's the goal with this platform for me is, not so much as to say this is a hot stock, that is a hot stock. I know that kind of get a lot of traction. But for me, the objective is to teach and educate, man. Like, that's what I love doing. I love just getting in depth, to the intricacies of being a great investor. And one of the things we're going to do is just see how these whales moving. Right? So we see how the whales move. You see the little fish that's always on the side of the whales? That's us. Now, one of the real things that come with moving with the whales is when you move how they move, right? So when they taking profits, stocks are going to sink. But when they buying in like today, man, Joe Biden came in office today. That was a hell of a thing, right? And so it's days like that that send the market up. You know what I'm saying? So let's get into it, man. So the first whale on the list today is Mears Empower Growth Fund. Mears Empower Growth Fund, right? It's full quarter. Portfolio updated December 31st. So this is fresh, right? They got 54 stocks in their portfolio with a portfolio value of $4,832,000,000. Not mad at it. So let's just take a look and see some of the things that they've been doing, okay? So some of the activity we see, they reduced 2% of their bank corp. They added 1.27% of United Health. Okay. Let's look for a big mover. Here we go. Big mover. 42% they reduced their position in American Express. Right? It equals 0.96% of their portfolio, less than 1%. They have 386,000 shares. Average price buy-in is $120 a share, last reported. And it's worth $46 million, $46.5 million to be exact. American Express, and I'm trying to ask myself. See, because when you see them, to me, when you see them come up off of 40, 50, 60%, that kind of signifies to me that they kind of coming up out of a position. Right? So one of the things that whales do, and it's a lesson that we've adapted, is if you sell a position, you always wanted to go start a new position. Definitely was a surpriser that he came off that much of American Express, right? But let's just dig into it. Let's see something he bought. So he purchased. Okay, here we go. They added 5% to their position in Activision Blizzard, which now brings it up to 1.19% in their portfolio. I'm not mad at that. I'm not mad at Activision Blizzard being added to the portfolio. They have 620,000 shares. $92 was the last price they got in. for about 57,567,000. I'm not mad at that because gaming is a hot sector right now. I'm not mad at that. Gaming is a real hot sector right now. I like Activision Blizzard. I like Take-Two Interactive, right? Definitely not mad at that. Definitely not mad at that, right? But as we continue to look, we see that Honeywell sold off 44.44% of the position of Honeywell, bringing it back under 1% at 0.99%. They have about 225,000 shares at $212 a share, equaling about 47,855,000 share portfolio value. I'm not mad at that, right? I'm not mad at that. But one thing I have been seeing is, now if you hear me talk on my Instagram, I talked a little bit about banks. Now, if anybody know me, they know Trap love banks, right? So I've seen like a lot of these big investors have been adding to Wells Fargo. A lot of the whales have been adding to their Wells Fargo position, and I wonder why. Because Wells Fargo hasn't done anything to like sell me on them. But they added 7.55% to their Wells Fargo position, bringing it up to about 1.78% of their portfolio. Not mad at that. But let's look at it. 2.8 million shares. That's a lot of shares of Wells Fargo. At last buying price, $30 a share, and it represents about $86 million. Y'all know I done talked about this. Wells Fargo, like I've studied, I don't see it. Now, here's a company that I used to own. Right? I think I still own a little bit of it. Greco Inc. Right? So they the company that does a lot of the tubing. They put stuff in tubes, they got the little machines, put stuff in in like the hydro guns, the corking guns. Like, this is a great business, right? It's a boring business, right? You have a strong balance sheet, a dope moat. It's 0.88%. They reduced it. It didn't take much. And you see that he like it like I like it, right? Because it's 3.36% of his portfolio. He has 2.2 million shares of his company. Ticker symbol GGG. Average price last reported $72 a share, and it's worth $162 million in his portfolio. Damn! Definitely feel that, right? Definitely feel that. But also, they reduced the Walt Disney by 41%. You don't believe in Mickey? How do you don't believe in Mickey? I'm actually about to take my daughter to Disney World this week because it's her birthday. How you don't believe in Mickey? Right? 41%. That means he was almost close to 3% in his portfolio. Because as we look now, it's worth, they have 565,000 shares, represent 2.2% of their portfolio. Average price $181. I can see why you got off at $181 because I personally bought Disney at $89. Did we buy it at $89? Did we get Disney at $89 or did we get it at $90? I gotta look at my portfolio, yo. Right? Now here's something. Now, check it out. He exited American Express but added 8% to Visa. Right? So Visa represents 3.06% of his portfolio, 675,000 shares. Average price $218. With a portfolio value of $147 million. I'm not really mad at that. I'm not mad at the addition of Visa to your portfolio. I mean, it's a staple business, right? I'm okay with that. Right? Next we're going to get into is Stephen Romick. Stephen Romick of the FPA Crescent Fund. Right? Full quarter. Updated December 31st, right? Has 45 stocks in his portfolio worth $7,381,694,000. I'm not mad at that. And they've been doing a lot of selling. 16 of their top 18 positions, they took profit on. They took profit on Comcast. They took profit on Broadmoor. They took profit on Google. They took profit on Alphabet. They took profit on Facebook, Citigroup. Okay, so check this. Iron Pick, ticker symbol AON. They added 41.21% to that position, right? The thing is a financial service firm that provides advice and solutions to focus on risk, retirement, and health, right? Something he's seeing that. Average buying price $211. They have 983,124 shares of this business, worth $207 million. 207,705,000. Right? So he believe in that because he's selling a lot of tech, he's selling banks, right? But he bought into this financial firm. That's interesting. But that's what his other buy-in is. Wells Fargo. I'm telling you, it's something about Wells Fargo that these guys are loving. Right? Wells Fargo, he added 7.19% to his portfolio. Well, it represents 2.6% of his portfolio, 6,360,000 shares of Wells Fargo. At $30 a share average with a portfolio value of $191,946,000. I gotta go dig into Wells Fargo a little bit more. I just gotta understand what they love about this business. Like, what do you see in Wells Fargo that you love about this business? But the company AION, actually, I can see something over there. Now, the company does have high debt. The company does has a high level of debt. But the earnings have grown by 26% last year. 26%, they grew last year, earnings by 26%. And they're forecasted to grow another 9% for the next 5 years. I'm not mad at growth. I'm not mad at growth. Are you? I am definitely not mad at growth. So that's might be a company for us to go research and look up on, just to understand why they doing what they doing. Got off 50% of Baidu, which is the Chinese company, so-called. And I'm not mad at him getting off 50% of that. I think China gonna be in for a minute, man. But he added 54% to SoftBank. 54% of his position of SoftBank, equaling 1.57% of the portfolio, has 500,000 shares. Average price $232.73. $116,555,000 is what it represents to his portfolio. But I see he also has 1.5 million shares of SoftBank. You gotta sleep. Don't sleep on SoftBank. Don't sleep on SoftBank. They do a lot. They definitely do a lot. Right? And he added to Signature Bank. Right? We just looking at what they buying and what they selling. Oh. He had 187% to his portfolio of McDermott International. Now, McDermott International was a company that used to be one company. I forgot the name of this company before it became McDermott. Damn. I hate when that happens. But it's okay. It's definitely okay. So let's see, man. Let's see what else going on, man. Dodge & Cox. Dodge & Cox. Full quarter update. Listen, this all updated. And we know it's earnings seasons right now. So y'all better be paying attention to earnings seasons, right? And so one of the things I did, if everybody know, I literally love the banks. I love the banks. I love the financials, man. One of my favorite banks outside of Chase Bank is Goldman Sachs. Goldman Sachs killed it for earnings. Shout out to Goldman Sachs, man. Damn, you did. Goldman Sachs killed it for earnings, man. So let's go, man. Dodge & Cox, this is our premier company of the week. Dodge & Cox, why they premier? Watch them hit their lineup. Dodge & Cox has 71 stocks in their portfolio worth $70 billion. That's right, 70 billion, 128,994 dineros, dollars, muchas. Yeah, and top of their list, guess who it is? Added 10%, top of their list, guess who it is? Wells Fargo. Top 3. And here's one thing that I'll teach you all when you're listening to this, right? When you're looking at Wells, right? I always look at the top 5 holdings they have. And normally the top 5 holdings are they most of their money will be in the top 5 businesses. I've noticed that. Top 5 businesses. The 5 and everything else would be cool. So let's talk about let's talk about it. Wells Fargo. They just added 10% to this Wells Fargo's position. They have 87 million shares of Wells Fargo. 87,371,841 shares. That's a lot of banking. That's a lot of fees. That's a lot of overdrafts. That's a lot of credit lending. Transaction fees. God damn, Wells Fargo winning. All right, so 10%. Yeah, they added 10% to their position, averaging 3.76% of their portfolio. Average price they bought in $30.18 represents $2,636,882,000. Damn, that's a lot of money, man. Gee. But they been doing a lot of selling. They sold 10% of Charles Schwab. They sold 11% of Google, 11% of Comcast, 21% of FedEx. Let's talk about that, right? So they sold 21% of their position of FedEx, now equaling 2.89% of their portfolio. They have 7,800,000 shares. Average price $259 with a portfolio value of $2,225,000. I'm not mad at that. But they added 29% to Raytheon Technology, so that tells us a lot, right? Averaging out at 2.41%, right? 23 million shares. Yeah. And as you can see, I want y'all to notice something too. Look, so they have, when it comes to Raytheon, they have 23 million shares, right? But it only represents 2.41%. Right, so let's see that. Raytheon, 23 million shares. But Microsoft, they only have 7 million shares, but it represents 2.51%. Price. Price is what you pay, value is what you get. It's something we talk about often. Right? He added 3% to Signal Group. We talked about that. The insurance. I remember I was an iron worker and we owned Signal Group. We used to get our insurance through that. So it wasn't really too bad of an insurance company. Right? Let's see what else they own. We got off of. Got off American Express. Got off 22% of United Health Group. 22% of United Health Group. Right? And so now he has 1.8% of his portfolio. Represent 2.9 million shares, right? Average share price $350. Represent $1,039,401. Not mad at that at all, man. Not mad at that. Oh, he got off of 0.16% of Coors beverage. You know, Coors, right? The beer, TAP, ticker symbol TAP. If you ain't know. Right? It represents 1.15% of his portfolio. He owns 17 million shares, 846,000. Right? Average price $45.19. Represents portfolio value of $806 million, $503,000 his portfolio. So listen, man, today we just broke down 3 wells. Right, I just want to tap in each and every Wednesday. Give us 3 whales to watch, man. Let us know how 3 whales move. Right, we had Biden in the office today. Definitely love y'all, man. Do me a favor, like and subscribe to the channel. Tell somebody a little bit about Whale Watching Wednesdays. And the objective here is just to give us some game on some stocks or some businesses that the whales are selling and that the whales are buying. It's your boy, the Wall Street Trappin, man. Big trap with me.